Good morning from the Protos newsroom. The date today is Wednesday, the 16th of December, and you're listening to the Protos Daily. These are the main headlines this morning. Estonia strips nearly 1,000 crypto startups of their business licenses as the country cracks down on money launderers. Privacy-focused crypto Monero sets a 2-year price record, and Grayscale's portfolio grows $3 billion in 1 month. At the present time, Bitcoin is trading at just over $19,700, up 2.33%, making it the best performing top 20 crypto asset in the past day. Ripple is the worst, down 5%. The largest known crypto fund in the world, Grayscale, now has a gum-munching $13 billion worth of digital assets in its portfolio, up from $10 billion just 1 month ago. In fact, Grayscale has hardly stopped buying Bitcoin all year, having spent $278 million on Bitcoin in just the past week. Bitcoin now accounts for over 80% of Grayscale's massive crypto holdings, followed by smaller investments in Ethereum, Ethereum Classic, Bitcoin Cash, and other smaller projects like Ripple and Litecoin. Grayscale belongs to Barry Silbert's digital currency group, which also owns niche crypto media brand CoinDesk, as well as a string of other industry embeds. Grayscale divides its crypto holdings into different trusts, which trade on select stock exchanges, giving investors the opportunity to profit from crypto price movements without holding the assets themselves. The fund's Bitcoin Trust, for example, is up more than 160% in the past year, while Bitcoin itself has risen over 180%. Still, the sheer amount of Bitcoin that Grayscale owns is no joke. As of its most recent disclosures, Grayscale actually controlled around 3% of all Bitcoin in circulation, causing some to worry its influence over the market might soon grow too strong. The Estonian Ministry of Finance has now stripped nearly 1,000 crypto startups of their business licenses in a bid to keep local companies operating within new money laundering laws. The crackdown comes after recent amendments to Estonian law put greater emphasis on curbing money laundering in the country and leaves just 400 crypto startups licensed to conduct business as usual. Estonia grew to prominence in the past few years thanks to its online-only e-residency program, which for a fee allows outsiders to register businesses and open bank accounts, amongst other things. Bloomberg noted that around 70,000 digital IDs across 174 countries have been handed out to e-residents since 2014, mostly from Russia, Finland, and Ukraine. However, Estonia's financial police said in September that its lax approach to regulation inadvertently brought fraudsters to the country. They noted a number of overseas businesses registered locally and run by e-residents raised funds via suspicious initial coin offerings, with some eventuating in an all-out scam. All this happens as another European country dreaming of a brighter future, so-called blockchain island Malta, is struggling to bridge the gap between crypto and old-world finance. The new Maltese finance minister, Clyde Carana, recently commented that the local banks are still refusing to work with crypto startups, and warned more work still needs to be done to get them on board. On the chances that Malta's blockchain island pitch might become reality, local outlets Love in Malta reported Carana saying, quote, "Traditional banks have written off blockchain at its early stages. There's always the potential, but if we want to make it happen, there must be more work. The banks must be convinced that this is something that can really happen. Unless they're on board with it, it'll be very difficult to go for that." Monero traded at 2-year highs overnight as the privacy-focused blockchain continues to see surging activity. Monero hit a daily top of $150.5, marking a 16% jump in December thus far, and nearly 250% returns for the year to date. For scale, Bitcoin is up 170% this year, and Ethereum is up 350%. Analysts have done their best to link Monero's surging price to recent ransomware campaigns, the idea being that companies and other institutions might be loading up on the crypto in anticipation of being sold to ransom payable in Monero. However, it's also likely the market is paying more attention to Monero now that overzealous identity regulations have become ubiquitous in the industry. Unlike Bitcoin, Monero's ledger is entirely hidden, making it so far almost impossible to track transactions. This has long been thought to attract illegal activity, leading a raft of crypto exchanges to delist the currency in a bid to pander to government rules. But volume has been brewing in Monero markets for weeks, culminating in new all-time high records being set for the number of transactions processed by the Monero blockchain late last week. Monero's market cap is now a tad over $2.7 billion, making it the 14th largest crypto project behind Stellar Lumens and Bitcoin SV. UK-based asset manager Ruffer Investment has joined an apparent avalanche of traditional finance firms betting big on crypto, having allocated 2.5% of one of its funds to Bitcoin. In an update to shareholders, the firm said that a portion of its multi-strategies fund is to be directed towards Bitcoin as a small but potent insurance policy against the continuing devaluation of the world's major currencies. Across all of its funds, Ruffer handles more than $27 billion in client assets, but the one pegged for Bitcoin manages just $620 million. According to the back-of-the-napkin math, this means Ruffer is looking to spend around $15.5 million on Bitcoin at today's prices, which would net the fund just under 800 Bitcoin if bought at the going market rate. However, it's likely Ruffer can get a better deal than that. Still, the move comes amidst something of a crypto gold rush in 2020, with the likes of Jack Dorsey's Square, MassMutual, and Grayscale all investing heavily, and benefiting in a big way, thanks to soaring Bitcoin prices in the back half of 2020. Even the big banks are starting to soften their stance on Bitcoin. In May, storied Bitcoin bear JP Morgan started to allow customers to transfer to and from Coinbase and Gemini, two of the world's leading crypto exchanges. And in August, Goldman Sachs announced it would be doubling the size of its crypto trading team. In a move designed to make life easier for its partners and content creators, Microsoft has partnered with top 4 accounting giant EY to expand its Xbox blockchain platform. The overhaul will allow Microsoft's gaming partners to track, manage, and process payments for royalties more easily, performing calculations in real time and providing data visualization to help track revenue. Powered by Microsoft's own Azure blockchain platform, EY says that the expanded solution will reduce processing time by 99%, and that so-called soak testing, used to measure the performance of software or an application, shows that it can process up to 2 million transactions a day. Microsoft's blockchain platform is built on the open-source Quorum Ethereum ledger, which lets developers build apps and tools for private enterprise blockchains in much the same way they'd build them for the public Ethereum chain. Consensus, the primary funder of Ethereum's development, bought Quorum from JP Morgan back in August. Thank you for listening. To stay up to date with the latest from the world of crypto, make sure you subscribe to the Protoss Daily on Spotify, Apple Podcasts, and all other major podcast providers.